Do it, Dobbs.
I wish I'd have got that first part, but that's okay.
It's all right. It's all right. We're doing good.
I messed up. I should have had it rolling.
It's all right. We do it every day. It don't matter.
I know. But it's good for them to hear our, a little rant.
I think that's the podcast right there. That's literally the podcast.
Yeah.
Good afternoon. Good afternoon. We are here in March 1st.
March 1st.
And I know we gave you that short up there before it happened. We set up for it. We told you. It didn't hit the top side. We were going down. It went up to that 230 candle.
What about my girl Asia, though? Huh? What about my girl Asia setting the table?
Oh, yeah.
The plates and the forks and the knives and the napkin.
Asia just took off. Asia was a beast on that. Like, if you just traded Asia up, there was no pullback on Asia. Asia was so lovely.
Free money.
Asia paid the bills. Pay the bills. Let's show some charts.
Free money. I need to hang on a second. I need to pull up.
And we're still in a range. We're still in this range right here. Same price, same range. Doing the same thing as before.
Oh, I know what I do.
Maybe first, second, or third of this week. We have a big report coming in on Friday. I think it's the jobs report. Not this week, next week. Look that up. Now, the jobs report isn't really important. None of these reports are important. It's really what they're going to do with the market.
I wanted to go over the risk disclosure statement because I got to start posting this on our videos just to keep us out of trouble because we have to.
Yes.
Even though we know if we read the chart correctly, we can't lose. But
I never tell people to take trades.
No, we don't tell people to take trades.
Somebody tells us, when should I take the trade? We say, no, we don't do that.
No.
We say, look at the chart and you make a decision from what you are taught.
Yes. So everybody knows that the risk of loss in trading securities, options, futures, forex, and commodities can be substantial and not suitable for all investors. You must consider all relevant risk factors, including your own personal financial situation before trading. You assume the risk of any and all financial investments you make. And again, hypothetical performance results that we show in the room doesn't mean that you will make them, and more likely you will not. You will lose money.
90%.
90% will lose money. Unless you know how to trade the Stangl methodology.
Let's do it. Wrap it up. Let's get it done. Let's go back to the yearly chart. And we're still in this same scenarios as yesterday. We still
in the daggum range that we've been in for months.
Well, we're consolidating at the lows coming into the first of the month. And we are still here in this area. And we're still at a monthly halfback, which
interesting, John. You know what's really interesting before you get too gung-ho is to remember the scenario that you gave us yesterday on our recap.
Oh yeah,
over here, what we were expecting, a down day today.
Yeah.
And yet what happened?
Yeah, we had the down day.
We got the down day.
We saw Asia buy it up until 1930. And if you guys know what 1930 is, I gave a nice little video for Elite Group. It's out there. And then it just ripped. After 1930, 2100 just ripped.
Now, are you talking New York time?
Oh yeah, New York time. 1930, New York time, 7:30. It literally flipped around. We hit something. We hit a weekly halfback. We came down to 57. We also came down to London close range. At time was a perfect trade. 57 held and it showed a long. We also had a nice short at the open. I took that short. We took it down to target. And we got our move down. After that, the play was done until 2100. But then the chart told you that 1930, they had other plans for it. Asia at the lows, they ended up buying. It was the first time Asia at the lows.
Yep. Let's go into a smaller chart so they can actually see what happened last night.
Let's start with that. Just consider this chart right here that we're still doing this consolidation. This is consolidation from the first into the fifth or sixth. Now, initial jobs report will be reported actually tomorrow. And there goes the bell. It'll be reported into tomorrow. So they could possibly use that jobs report if it's good, if it's a large number. They could probably use that initial jobs report to send the market upward.
Yep.
Even if it isn't, they probably send it upward. If they don't, we have targets down here.
Yes, we do.
We have targets down here. We have the low over here. We have this high, and we have this halfback that has not been touched all year. In fact, this is where they flip the market. So we come down here. It's a very big possibility that it's probably going to hold, but because of all these orders here. But if they took a 6-month contract, all these people are losing money. So I'm not really sure if we do come down here, everybody loses money and the whole market just loses money on the 6 months. Because we're coming into March, and if they bought down here 6 months ago, it won't be 6 months. I don't know, but whatever. The options is the thing that really is concerning it. And it's holding the market up into the open. It's literally destroying the market, the options market at the open. I suggest to stay away from it because it whips back and forth to both sides.
Now you're talking New York market, correct?
Yeah, New York market is whipping back and forth. And what the market is doing overall is that they're letting them get position at the open, and then they're literally selling into that position.
And we've always been like that. We've always said do not always be out of that pre-market trade before New York opens.
Yeah.
We've always said do not trade.
According to reports, that 8:30 report tomorrow, do not be in that trade. That trade, and they do it early nowadays. So
you're better off waiting for London close.
Yeah, you're better off waiting for London close. You're gonna get a move up, and then you're gonna get a move down, possibly into 1300. Today was the exact same play as yesterday. They sold the highs at 1300, and they sold it all the way down.
Yep.
So you could have literally took from halfback, risk that halfback, risk the high of London's close, and it wasn't much. It was maybe 4 points, and you got literally 30 points, about 30 points, all the way down to the 1300 target. Yeah, about 30. Well, about 30.
Yeah, 30 some points.
Maybe 26 points. About 26 points. 39.49 held up, and it did wick down a little bit more, but that was still into London's close range. Anyway, so let's talk about this yearly real quick. We are still bouncing over here. We're bouncing over here. This is a weekly halfback, also is daily halfback, and we have the monthly low right here, which is holding. If it doesn't hold, we plan to come down. But what we are looking for is a big candle up, maybe into that jobs report. Maybe it has a big candle up. So we need to see this right here. We need to see this in order for this to change the market to the direction of the up right there. Boom. We need to see that in tomorrow. We need to take out a high right here. We keep failing halfback. Halfback of this candle failed. Halfback there failed. Halfback of this candle failed. But this candle is a little shorty candle.
Yep.
So can we possibly get a jobs report that makes a big candle like that? Yes. Is that going to be an intention to keep on going long? No. We need to see a halfback hold off that candle. Initially, this candle down here. But it hasn't happened. So right now, the trend is still downward. And we have targets in it. So we still have 39.23, which is still our London close range down there, right? And we have this 39.15. This is almost the same play that we took up here when we bought it long somewhere around here. I forgot when it was.
Yeah.
It gave us like a long ray up here somewhere. Almost the same scenario that it bounced off, because they did this kind of day where it was supposed to sell off and they just took it all the way to the other side. Anyway, let's roll into a small time frame. We'll keep an eye on this and let y'all know how that goes. Let's go into the next chart. The next chart would be our breakdown on a 30-minute, which is literally exactly what happened. So into the open, I mean, remember we went back. I think we had a target yesterday of that Asia halfback, and as we opened, we were below that Asia halfback right here. Actually, we went right back up to it at 69 and sold right down into it. We sold just sold down, literally.
Yeah. So literally, if we key in off of this candle right here, that's halfback. So you got high, you got low, you got halfback.
And the fact that it failed at this, we're still in this range. Let's put it back up here so you can see. We're still playing this range right here. So when we open, look where we were, London's close range, right? So when London's close open and we literally failed everything and we're below halfback right here, I mean, this was go. You could literally got 5-10 points here.
That was easy. I mean, to me, it was easy because if you had the body of the candle, like I said right here, bodies of the candle, we opened at halfback.
Yeah, we were at halfback, and the direction of this was continuation, and we were way past London's close range.
So what I always say, where we at clock? You've got 3 choices. 2 of them are wrong. So where are we at? At clock, right here. Where we at? Are we at the high? No. Are we at the low? No. So you just eliminated the 2 choices.
And we were right there at the low of the 15.
Pull the trigger.
Yeah.
Boom. Right in the clock.
And then 1930 came around and they just bought it up. Now, will this be a buy? I'm not sure. I wouldn't buy this because we're below this range. But in 20, you know, when 9 o'clock Eastern hit, this just gave indications to buy this. Like this is.
Well, once you reclaim right here, once you come back inside of range right here.
Yeah, once you got inside range and you were inside the 151 to the downside right here.
Yep.
At the same time, all that was happening.
Could have bought Stingham line.
Yeah, you could have bought Stingham line up here. We were above halfback, so where we go? Right to target. And then after, this is your halfback right here. That's time. And look, they kept buying it up. Into midnight too. Look at this. Into midnight they bought it up at 1 o'clock. This, if you bought halfback, look, I don't even have the down range. You bought halfback, it literally hit target. Now when London opened, this is London's open right here. It's halfback, right? When London opened, they gave you a key. They did not go see their 151, as you see right here. It usually comes up here quick.
Yep.
And it didn't do that. So I off back.
And the range was short. They only had 5 points range, guys.
Yeah.
London normally rips 20 points.
So, and then what happened was that as soon as 5 a.m. candle started printing, you could see high, low, right? And look as far as we went. We didn't hit the highs. Now, if you go back into yesterday's, into the close, no, not yesterday, it was the other day. We weren't hitting the highs at all. In fact, downside was we hit the lows, and then look where we came back to too, literally to halfback of that halfback. And from there it was done. Like it was literally done. You could have got 5 points here if you were selling here, or if you waited to the break. Once it broke under the Stingham line, it was a wrap right here. In fact, the indicator came in and said short here. I know that for a fact that the indicator came in here and said sell.
The live stream alert reversal came in right there at clock
and said sell. In fact, this is our 7 a.m. candle, and we're at halfback. So when it did this and rolls over, this is showing a long right here, still long. This is a sell. This is realistically a sell right here, right? We're losing the halfback of London's open range right here. And it kept going. Like I had this target and it literally just ate it up.
Replayed what Asia did. That's all they did.
Yeah.
Same scenario.
If you're a new trader, you're trading with 1 or 2 accounts, 1 or 2 minis, and you take that play from there to there, like say that it failed here and you're waiting for the stream, let's say, sell up here. Yeah, that's good. Or sell here, you still got 5 or 10 points. This is literally 85 or right here, 84 when it was telling you.
That's easy.
Get this right here. Now up here, you get a little bit better and you start seeing this happening. You start seeing all this, that how we set up, and you got a precision up here, and then you start adding here, and then you're exiting here. So that's where we want everybody to get to. Do you get this whole move? This whole move, you don't know if this happens. You don't know if it holds here and comes back up.
But you can, though. You can have a runner because
and that's where I was going
to clock, because you've got till 9:30.
As long as you have it going down here into 9 o'clock, you're good.
Yep.
9 o'clock, you know to get out. Before
Yep.
9 o'clock, you're looking at this saying, hey, I'm getting out 8:45. I'm out.
No ifs, ands, or buts. You're
Yeah,
getting
you
out.
do not want to stay in this trade here at all. That's the end of this trade. Period.
Why? Why? What did it do? Because it bounced right back to freaking half back.
Yeah.
Right.
And this thing could have literally gone up here, which is what it did yesterday. So if you had that scenario where you go back up here and it comes, oh darn, I hate when that happens. I gotta fix myself. Okay, so it could literally go from here to there, and you're like, oh, I'm looking at the same price, but I ain't take profit. That doesn't make any sense.
Yep.
We don't teach that at all. Take profit, because what you want to do is always catch this play. These plays happen. It's been 2 months. Going on 2 months, and these
Does
plays
the
happen.
same thing every day, has it not done?
We don't change anything.
Huh? Has
The
it
only
been
thing
doing
you
the
gotta
same
change
thing?
is if you change, you can't change time. You can't change time. You can change price, but you're not gonna change time.
Nope.
So if we go down here and 9 hits here and we come back up here, you're being a dummy for doing this, because if this told you to go long and hey, we're going back 7 a.m., they're holding, that's a good play to go up there. But it didn't do that. And the reason it didn't do that is because we had other things to go address. We talked about it yesterday. Hey, we're probably going to go see us 200. And there goes 200. We saw the weekly halfback, and that's how it bounced. And then we went to 200 and the weekly halfback here. Now, I say when this bounced here and they hit this 200, I said, hey, this is them traps they set to people buy it up. This is still New York selling. So I didn't want anybody to sell down here, but I mean, when it gave you indication to sell up here and you go back, if you set up right, and I think in the video we said, look, what's that down there? What's that here? Look, London's close range. We're a halfback and we can't get above it. So yeah, that's a sell. And then we go, London opens and we go right back to halfback and it can't get above. And look at this thing in line. This is on 15 minute. 15 minute. Does anything on there tell you go long at the highs? Let's see. This didn't even test halfback here, so this shouldn't even be a long. And then this movement right here, none of these candles help test the halfback of each candle. So that was them covering as soon as they hit the 200.
Yep, because they didn't touch that line, didn't touch that line, didn't touch that line.
And then as soon as London's close, if you did the range, it wasn't long. You could have rolled this all the way up to London's close range, all the way up here. We hit the high side of the 200 into 1300, the 1 p.m. Eastern candle. This thing off that.
It's 12 noon, guys. 12 noon my time, CST. This is where I talk about 12 noon reversal. Yeah, 12 noon reversal.
This was a cover. This was still them shorting into this because the movement was still from here down. If you put a trend line, did we break trend? You can do whatever you want. You could wait. If it fails there, hey, we get below Stingham line. Let's go. I don't even think this is Stingham. I think it's just look. That's a 9.
Yeah, the red up here is Stingham line.
Yeah, so even if you short it up there, you're good. Boom, risking Stingham line. Even if you have a moving average like this 9 right here, that's your risk. But you want to short it near that line. You don't want to short the lows neither. You don't want to be short here. You want to short here. Look, there's a halfback failed. So look, these halfbacks over here failed. Right there, failed. Came, try to hold, failed. Right? That's a good. That's an indication. You gotta look at all
high, low, halfback sweep.
Yeah, you gotta look at all look right here, halfback. They try to hold it. What did it do here? Failed right here.
High, low, halfback sweep.
So you're still in a short into here, and then look, we got our target. So literally, it failed halfback, and then we went where? To the target down here, coming into 230. You don't want to be in the short. And look what they did. Once 1500 came, I say do not trade after 1500 because what it's going to do is we held the lows of the London close range, right? The London close range right here. If we hold the lows, it's not going to go down anymore. And if we go under and we go above it, you better get out that trade because that play is done. So take those highs right there, right there. So you see, this is the high. That's the low. Once we wicked under and came back above, guess what? That's not going to continue to go down. What you want to see for this to continue to go down is this price right here at 1500, right? This candle right here, right? To be down here. That's what you want to see for continuation. But once we did this and 1500 closes up here,
Back inside the range.
it's going to be inside the range. All it's going to do is do what? Go back to halfback. So now we get rid of this. We can get rid of some of these. These levels don't matter. They don't matter. Like, you can't play them from one day to another. You play the halfbacks from one day to another because we already know where price might return. But then you start the range again. And remember, we still haven't break 70. But on the yearly, we're consolidating at the same price. And right there, look at it. So we got high, low, halfback of the range.
Yep.
That's where we're at. Now let's set up. Let's say we set up for tomorrow. You got a range right here. It will probably be a halfback at the open. So we'll be at our halfback right here. And we're at halfback. So, but right there. That orange is very, very bright.
You like using the orange?
I just like seeing it because on your phone, you
I like that Tennessee orange. It looks real good. I like it.
You see, I didn't see. I guess the low is here. It's actually right here still. See, I'm off with this at that.
Yeah, that's all right. You're off a little bit. Just readjust.
It's breaking my eyes. That's why that orange. That orange is breaking my eyes. There we go. Bam, right there. So let's fix it. So look, it does make a difference. Now look exactly what we did. Boom. Once we held down here, there's the 200 moving average on the yearly. We're right to halfback.
Yep.
And how it's looking is that we're going to open above, maybe right there at halfback with the open range at halfback, which is an issue right there. And we swept the downside, and the market is still moving during the after hours. My thoughts on it is we're still consolidating, and we got a report tomorrow, so expect maybe sideways action to this report. If they do use this report to move this up into the second or third of this month, tomorrow's Thursday and then Friday. We've been down, and we're also on a third leg down.
So if report's good, I would expect to go on down to Area 51.
Well,
it's very possible.
If the report is bad, like if they have like bad,
if it's bad, we'll probably be up.
Yeah, it'll probably go up because the market wants they want to see unemployment higher in order for the Feds to stop raising interest rate or start considering that interest rates are going to be there. Now, do these reports matter at all? No.
No. Chart's going to do what it's going to do.
Yeah, they're more dangerous when they don't move off the report. Take that for consideration. That when when the market doesn't move because of a report that's supposed to make it move, if it doesn't move, that's even more dangerous. Or say it moves small amount, that's very dangerous. Like, not dangerous in the fact that it's bad. Just be mindful that we're still continuing the trend in which it's already set. So I think yesterday there was a report, and we continue in that trend. Now, at the end of the day, they just sold it off. New York sold it off. I don't think they were ready to have it take off because we had unfinished business at the downside. But now, if you look on the yearly, they're kind of setting this up kind of realistically like funny. You got a hit on the 200, you got a double hit on the 200, right? Like right now, we hit once, we hit twice, we hit three times. We didn't break, and then we're consolidating on the yearly. So this consolidation, remember, it is we held here for 1, 2, 3, 4, 5, 6 days, and we held 12 days up there before we made the move down. Not necessarily saying we're going up or down. We're ready for both plays, but just be mindful. There's a lot of untouched scenarios up here that it could come up because the market does not want to pay anyone that's selling the market. Realistically, they want to get as much money from everybody. So the only way that they can make money is if people are selling into the market with puts and calls to the downside, they're gonna make the market go up because they do not want to pay them. They want to take their money. They don't have to go down because value in the market is just an illusion.
Yeah, futures market, that's just numbers, guys. Those numbers on the right-hand side right there is no dollar value. Those are just numbers.
Yeah, that doesn't matter.
There is no dollar value in futures.
If the market really was trading where it should be by PE ratio, we should be at 35 or 3,600, and we hit that low, and now we're trading like at 17 or 18 PE ratio, where we should be at 14 or something like that. When the market dipped down there, that was the realistic price of the market. Right now, I'm still getting dividend payouts from stocks. So in that sense, if they're still paying dividend payouts, companies are still doing good to pay. You know, if they're paying, it's still good. And so they stop paying people for dividend payouts, and people actually leave long-term investments on companies like Apple and all these other companies that pay dividends. Then you see the market actually really come down because they could buy cheaper. And when the market finally accepts that they're selling because they're not paying out these dividends, then the market will correct itself. But I don't know if that's ever going to happen because
the market's set up to be a buy.
Yeah, the market is still supported by the Fed. So even though they're increasing interest rates, they always say, "Hey, we're going to start tightening. We're going to start tightening." They've been saying that for 2 years. Yep. That means they're still buying into the market to sustain it up. So if they're still buying it, when's the market going to come down?
Now keep in mind, they're making money.
Yeah.
They're buying it. They're selling at the highs, guys. They're making money. All they're doing is just regurgitating the same money. That's all they're doing.
They come in there and they say, "Hey, you know, the market's tanking. You better believe they're buying." When they're saying they're buying, you better believe they're selling.
They're making money.
Yeah.
The Feds are making money. That's why America's got. That's why they don't care about the debt ceiling. Yeah. We have money. Don't let them fool you. They make money every day.
The biggest consumers in the world are in the United States. They don't care. If we get shut down, every other country gets shut down. We have the biggest market, period. The biggest market trading. Doesn't matter. When things go bad, though, it'll affect the market. But if we don't have any bad news, it's not going to really, people are not going to dump.
Nope. The markets are buys unless bad news, meaning war or president dies or any kind of bad news like that.
Short the market, but it's gonna whip back and forth hard because it's gonna hit a lot of people jumping out the market. So if something like that happens, then yeah, they're gonna. But think about it. Until they started raising interest rates, the market didn't come down. So think about it. It was like organized. I will raise interest rates. Okay, we'll bring down the market a little bit. Oh, we're raising more. We'll bring it down a little bit more. Oh, we keep raising. Okay, we'll bring it a little bit more. They're still raising and prices are still going up. So which one is it? Are they satisfied? Where's that? I think the market's just holding the Fed's hostage right now too. One or the other. But that's about it. Tomorrow, what we expect? We expect actually a move up into Asia. How it's doing right now. We're still inside this halfback. We held this halfback. Guess where we could possibly go? We go up to 39.85.
Can Asia sell it yet? Are you sharing a different chart or what?
Oh, I'm sorry. That is the issue. So many screens. All right. So price is still going up into the close. Who knows what's going on? Possibly we're going to move up into the jobs report, and then prior to that, we'll probably sell off. Now, we do have this 70 level right here, and we're still consolidating. So what do we expect? Possibly a green candle tomorrow, a big green candle.
Now, something I did see too, we didn't hit the London close halfback range for today.
Oh, on the downside?
We didn't come up to hit the halfback of London close range.
I don't know. It just sold off straight up.
Yep. So they could go all the way back up into there.
And that's the 7 a.m. candle right here. So that's the only half at the aim touch. So that was the take profit at open because with time, because they could have done this. and then came down.
Yeah, I think it's the London close range over here. I think that's the halfback I'm talking about.
Oh, okay.
Over here that you don't have the London close range, somewhere over in here.
So we did come see it. You mean New York or? Oh, you mean London?
Yeah, yeah. I think New York didn't. They didn't come and touch it.
See, I did
The
have
New
it.
York
So
session.
I cleaned up the chart.
They just dropped shy of it. I want to say it's right here, somewhere right in here. It was around the 78, 79 area. There was a halfback that they did not touch.
It closed kind of tight, and it really didn't get up there. If you look at it.
And it might have been the 1445 candle halfback. I could be wrong. It could be the 1445. But it's around that 79 area. That's why I was saying, hey guys, earlier today I was saying, hey, we got some unfinished business up around the 76 to 79. That's what I was looking at. They did not touch that halfback.
So the scenario is probably, run it into that report, and they're probably already doing it. Run it into that report, right? Possibly hit here into London, then have it go this way, waiting into that report, and then we go
consolidate in London, yeah, in the 6 a.m.
Because they there's a couple things that they did wrong today. They didn't make a big red candle, but that little doji is kind of interesting as well. Where is that on the yearly? And we're still not closing below a halfback. So that daily halfback could be it. We hold there and we could go to the top. So that's 2 attempts to add it, 3 attempts at 200. They could literally do that scenario into that report, and London's open, go right back up to this price right here, and then pull back, and then or just hold right here, consolidate into the report, and then do this move up like this. Once they get back up here, we'll probably look into a Friday for them to sell it down. Possibly back to the same area that they take it off from. If they take it up and it just continues to go up, they continue to, they do this one, bring it back down, consolidate here, and then bring it all the way up, and it takes off into that report. You better believe Friday we're probably going to come right back into it, or at least till London's closed like that. If it does that, you better believe that 4,000 is on Friday. That's going to be Friday's momentum move.
Yep. And here's the thing too. If London close range halfbacks holding, we know if 50 holds, we're going to 50. So that means we can come back up here to the high side of London close range.
Let's see where that falls into. And we get above that. I mean, if we get look right there, exactly right there, it matches up right here perfectly. The thing is that if we get into this.
Yeah, I think that 88 was a daily halfback too, I believe. I could be wrong. But
the 87 is a daily halfback. Oh no, it's a low on the daily. But say that this scenario plays out. I mean, this will be a green day and Friday will be the red day, and then we're holding halfback of the previous candle. If we hold that halfback, you better believe like in a couple of days we're gonna make our move up. If it doesn't happen, the report comes out and they tank it, we're going down. We're going down to targets down there. That's why we set up. And we got this 70, but look how it's looking. We got 3 moves down, right? Let's do 3 moves. Started from here. One.
You got 2, 1,
3.
2, 3.
I mean, this is a big.
And then here's another 4.
But you see, this is kind of in the same week. So we're still kind of in that range because this finished on Friday. So look, we're still holding that low. So what does it look like? It kind of looks like if we hold here, it looks like a double bottom here. Like we're double, the market's trying to find its grip to the top side. See right here, 1, 2. That's on the same day that we hit the 200. So, we had this move, which is 1 move down, right? This is 1 move. That's 1 week right here, right? Into Friday, right here, Friday, and right here. So you gotta literally consider that whole scenario, that's a whole week, right? It's a whole week of downward movement from Sunday right here, boom, all the way down here. So your Friday move, right? That's one.
This
What are
one.
they doing to the market right now? It's making all types of noise. This is number two, right? Started right here. We break things down.
I think you want to start number 2 by the break of the low right here.
Yeah, but it's still the same week.
Because that's number 2.
That's still the same week though, Dawes. Look.
Yeah.
That was a big move to the low side.
Yeah, but we didn't take out the low. So that's why I don't count that top side. I only count what goes underneath the low. So that's leg number 2. I don't think we've had leg number 3 yet.
Let's look. Maybe I need more time on this because remember it's 30 days that we've been selling off. Wow, that's it right there. I don't know. This. I mean, this sold the highs. Like literally Monday was here. We started at the highs on Monday, and look, even though it doesn't look like that, that's still the same price as here. I mean, this is a big move down now into this week.
This is like the same thing.
I mean, they're making the market look like it's coming down, but realistically, we're only down 200 points from the high.
Yep. It's not that far.
No, not that far. We should. I mean, if the conditions are so bad, why aren't we all the way down, like below 200? That's the kicker. That they held the market up there for 12 days, right, at the highs of the month. They didn't give up any room. They held it up there for a reason. 12 days, and then it went to expiration dates of these shorts or puts in the option side, right? And then now they can't get out their position. We're going to the 30th. Now the monthlies are coming up, and we're at the low. So, I mean, to me, is the new contracts even being traded now, Dobbs, too. So everybody's flipping position on the contract starting already. In the 22nd and 21st, the Feds are going to talk again about raising interest rates. So if the market wants to sell, why would they sell lows? You got 3 weeks into that report. You could literally run the market up 3 weeks. This is the same, like Dom said, this is the same amount of movement to the downside. So this literally is the same prices into that Friday, right? And then this is really the sell. So say that we went up, realistically, the market could move up 200-300 points easily in a week. But you see how hard it was for it to move down in price. They're setting up for something, and I don't think they're setting up to let it go at the low.
No, I think it's more to the buy side, more likely.
Yeah, especially what it's doing right here on the 200. If we were meant to break this, it should have gone. And the thing with everybody's that they're probably selling down here, right?
Yep. Retail mentality, selling the lows.
And they're really selling. If you look at it, when are they selling every week? They're selling the highs right here. Selling the highs. So when they popped up, they sold into it. Popped up, they sold into it. Popped up, sold into it. Now us as day traders, we traded up. Oh boy, that's the worst thing. I think it was doing it.
I think you can hit that little auto thing right here on this right hand side, and it'll get you there.
It's driving me insane every time. So us, we don't care. We trade. We day trade. Guess what we're doing? We're riding this up. And if you're not comfortable, and we're riding this down, and we're buying down here, and we're buying down here, and we're buying down here. If I get to what, we'll ride this down, and then we'll buy down here. Why? Because of time.
Yep.
So we'll move up. We're riding that move up. I bet you there was no selling that day. Period. All the way up from Sunday to Monday, no selling. All this was keep it long until it takes you out, or take every time frame, whichever you want. Let it ride or go. You bought Asia, I'll tell you what, you got paid.
Yep.
In fact, Sunday's Asia. You buy it, you got paid, right? Let's look at Sunday's Asia. Sunday's Asia, right here. You buy it, right? This Sunday, boom, you buy it, you got paid. Look at this Sunday. You buy, you got paid. So the scenario is if you bought in Asia on Sunday, you got paid. You got paid heavy, but we don't necessarily teach that. You know, like there's
But
risk.
why is Asia buying it? Because it's a sell. Think about it.
To buy the high of the week.
If Asia's selling it at their open, that means we're in a buy model. Right
Exactly.
now we're in a sell model.
Yeah, in fact, let's take this scenario. If we make the
So
high,
Asia does the opposite of what the market's going to do. They're counter trend traders.
Let's say that we bought Monday and Tuesday, right? Monday and Tuesday is the high, and then we sell the rest of the week to look for sells, right? So let's do it. This is 2 weeks right here, right? So this Monday right here. Well, this one it doesn't work out because we're at the lows. Now we don't know where lows are at because Sunday they didn't set the low. Sunday actually sold off here. So when they sold, Monday's gonna be a buy. Monday, Tuesday will be a lows, and they bought it up.
Yep. Opposite of what they were doing.
And then going into Wednesday, everything was a sell into Friday. Now Monday and Tuesday here were the highs. And I guess we came back to those highs and then we sold. Well, Wednesday lows, Wednesday highs. You took it to the highs. We're at the lows, you buy. At the highs, you sold. Okay, opposite, right? And then you sold into the scenario is we'll sell into Friday, right? This is the bad scenario for this week, right? Look where Monday, look, we went up, right? On Monday, set the high. Tuesday was this. Wednesday was the highs. But we're already at the lows into Thursday. So this scenario right here is literally what we should have been at. Well, we could still do it, right? Now Wednesday lows. Yeah, look, Wednesday lows. Shoot. Yeah, we are at Wednesday lows. Look at this, Dobbs.
Yeah, you can go right back up to where you got it, right here. Come back right to that.
We can literally look at this right here. Thursday. What they call it? Turnaround Thursday?
Yep.
Let's see right here. Thursday. At the lows, Wednesday at the lows right here. They turned it around. Looks like the same chart actually. Popped up and then sold off. Made a new low. Today we didn't make a new low though. We did make a new low for the week. So possibly we get a turnaround tomorrow. This is a scenario that is literally up, but we're at a key area that we have to be cautious of. If you sold the pops from that 200, you were good. And I said it in the chat. Do not sell this 39.40. Do not sell down here. Didn't mean you couldn't sell on the top side because we never broke staying in line. We never broke it on any time frame. We never broke it. And if we did on a smaller time frame, if you're trading on a small time frame, then once it broke to the downside, you
could have waited till it failed it.
But look at this.
Threw it and then fell it. Nothing but wicks.
Never broke. Never broke. Never broke. Never broke.
Wicks. Yep.
Never broke. Came all the way down. Guess where we ended up at? Staying in line. You could have just shorted here. Let's see. If you short your staying in line, near staying in line, do you get 5 or 10 points? 61. You got 54. That's literally six,
7 points. Yeah.
Into the close right here.
That's your 5 points.
Now, right here, you're not shorting because we're not at the highs. But right here, when you short it, look at this move down. And you say, "Oh, I'm risking here on a 15-minute." The move is down.
And that's the thing. You're going to catch one that's going to be a runner.
So let's
catch one.
Let's say the worst case scenario. You see this pop up like this, right? See it pop up like this, right? What did it leave untouched? You got to look at this. Halfback wasn't untouched. Halfback wasn't untouched. Halfback isn't untouched. You got to use that in your mind, right? When you're shorting this here, yeah, you're shorting with a risk and you're saying, "Oh, it popped up." But listen, this halfback wasn't even tested. It just went right through it, right? Right? So in your mind, you got to think.
In my mind, there's 2 targets, halfback and the low.
We are on a downside. If you took 2 small minis and you took it to here, right, and you sold just Stingham line, it closes above Stingham line on bigger time frame, right? This is 69. If you put 69.50, what's the highest this gets? 72.40. That's literally 3 points. Let's say 3 points. You're losing on this, right? What? 20 points, 25 $25 right here. You're down. But this wick happens instantly because wicks on the 15 minutes are literally only 3-5 minutes. And this 15-minute candle is literally 3-5 minutes, right?
Yep,
Well, this
3
week
minutes.
is only literally 3 minutes up here. 3 minutes, you were losing maybe 25 points, right? Maybe. By the time you got to this halfback of this candle, you shorted here, 69.50. You got out here 62. That's what, 7 points? 7 points with 2 contracts is literally like $60, $70. So $25, $70 is pretty good. Now, say that you took off one contract here and said, oh, let's see if we sweep the low. Boom, swept the low down here. And then you start using another moving average, maybe, keep you in play. Well, let's see. If we take out this high, you move, you stop right here. You take out this high, you're out of play. You're still good, right? It's not a loss. It's a little scratch. Try and get the low. Boom, you get this play. This is literally 10 points right here. That's the 5 to 10 points. We don't expect this to keep on tanking. But there's other scenarios in here, and we don't expect you to take it that far. But as you get better at trading and you see this move up that wasn't contested at all to make this move up, this was a bounce off the 200. That's why I said do not short down here. Do not sell down here because of that. But when you saw this going up mentally and on a smaller time frame, I keep telling everybody on a smaller time frame, you're not going to see this. I don't even go to the 5 minute. Why? Because it gets you literally a lot more discipline, and you start to see this going on. And you're like, wait a minute, we didn't test this. Look, we didn't even test half back of this candle up here. There's a lot of things here that's telling you, wait a minute, what are they doing? You got to start analyzing this. Wait a minute, we're literally filling the range of the open. We didn't test this candle, and we went all the way up, and we come back down. What's going on? We ain't tested 200 here. We hit here. What's going on? They literally created a bounce, basically. This was a trap for the longs. Whoever was in here undisciplined to wait for this to hit here. And then, they're looking for, oh yeah, it's bounced off 200. I got to get in. No, this is the trap they said all the time. And I tell you guys, be patient, wait for the next play. If you just didn't even play this on the short side and you saw London's close range, you got a nice play to the top side, period. If you don't get any of this and you don't get this short, it's completely okay. Yeah. But if you took 1300 candle down, right, this says short. It wasn't above halfback, shorted. Risk the halfback. Boom. All right, let's risk the halfback. We're above stain line, above moving average. Set your stop. This high, right? Boom. Okay, now we're down here. Set it this high. Keep on going, because if it gets above halfback here, it's done. Set it here. You almost got stopped out. And you hit target down. You literally hit your target down on the way down, all the way down. Look, it didn't even stop you out. It came high. And literally right here, maybe you're out of your position because this is 35, right? So you took this trade, 63, you're down here. Yeah, 54, it's 10 points right here. On this wick, you're down 10 points right here. On this
what did New York do? They triple dipped today because here's one, here's two, and then here's
everybody that was early because they aren't disciplined to wait for the 200, and then they London is closed, send it up. Indications for it to go up, it probably go up. There's a lot of indications here that are saying that they might take the market up. And now we're closing above halfback of London close range. So right now you have halfback here, as we said, London's close range right here, and then you got this halfback. And if you look a little bit longer, right there. That does not look like they're selling.
Nope.
So it is dangerous to say that we could get this move again into that report. We have things that tell us we set up, and then we wait. And then we take our plays off of what it's doing. And we click everything together. Like I said, I was up there already telling you guys, hey, look for a sell. 7 a.m. the range, I was already selling up here. I was selling up there. I was deep selling up here. But gets up here, I got to get out because they're not done with this play to the top side. But like I said, New York, London Open told me a story. But they were literally saying, nope, we're not buying these highs. We're not buying these highs. And I said, oh, okay. And then 5 a.m., I said, well, where do they sell? They sell at the highs. And let's go to the 2 hour and you see something too that posted that chart as well. So remember, we dropped hard into yesterday. Dropped hard, came down here, swept the 2 hour low, came back up. Look what we did. Swept the 2 hour. And they've been doing that often. They drop down, come back up, swept the 2 hour up here, and they sold into 1300 candle right here. Both. Same thing that we did today. So right now we're looking maybe possibly going up here, sweeping this high and maybe continuing, but this 2 hour looks very, very efficient. Can we go in the opposite direction? Yes. What they're trying to do is get back up here. When you see a candle that close short like this,
but they could continue to consolidate. So
this is another scenario on a 30-minute that you could go back and look at candles. When you have a candle that goes down and comes back up, and we can't close even with this candle, you better believe they're selling heavy up here. Same difference here. Same thing that they did here. Pops back up. We're literally closing lower than this candle. That means that there's more sellers than buyers. So it's very dangerous. You can look at it on the 4 hour before it sold off at the highs. Where is that candle? Here it goes. Just stay right here. See this day right here? They popped it up, closing below it. This is that 1300 candle that took off from the lows. And then the next day we were looking for selling into this. And this literally closed below it. Why are we not closing at the same price? They're heavier shorting than long. It doesn't happen all the time, but you can see it. As soon as we break that low, it just continues to go. Let's see. These candles. This was not even at the highs. Right here. Boom. Low. Boom. Lower than that thing. There's more sellers in there. They didn't even let this candle wick up. This candle ain't even past that low. Same difference here. They just been selling the market heavy. These candles are BS. It's probably like reports or something into 8:30, and then they sell it back down. They've been selling and buying, so whatever they do, we're gonna do it. Doesn't matter. We set up, right, Dobbs? That's it.
Yep.
Another day, and we're coming into 2 more days into the week. Let's keep doing it. Keep setting up.
Set up. I cannot stress it enough. Set up. Put it in the homework tab. Let's make sure y'all are setting up right, because it starts with the setup and ends with the setup.
We do share the charts in the elite room. They get the first dibs on it. I do try to post in the regular chat rooms. The elite room gets priority. They also get a little bit more info what we expected before it happened. They will be getting that first because it's hard to navigate between 2 rooms. I will post charts on both before it happens of what we think is going to happen. But more likely, it's really what really happened. So that's a scary part.
But hypothetically, our risk disclosures say you're going to lose money 99% of the time.
Yeah,
unless you in Stanham's room.
And all you got to do is just fix. So when you're in here, you literally got to, the hardest part to do in here is to forget everything that you learned. And literally start developing where you're comfortable in taking the play. And the risk is really very important. You can make one play, you could take this and make $20,000 right here. But the risk is the factor that's going to play in that. So if you say that you took this play long, and we're above Stingham line here, right? And you took this play long, you do get a good amount of money all the way up here. You get two contracts ain't killing them. You're saying that if it goes underneath Stingham line, I'm out of it.
Yep, that's less risk.
Nothing but 10 to 20 points here.
Yep, that's less risk.
So if you develop something like that, is good. What I do literally is I stick to what I'm comfortable with. But remember, everybody's risk is different. You cannot trade like somebody else, and these people are posting YouTube and all this stuff, P&Ls. That is not how you want to approach trading. You cannot make that money at first. You have to develop yourself to take those plays and always see it. And that's what we show every day. We show the same play every day, and we keep doing the same play. We don't, there's no flipping around, no chaining up. If everything matches up with, let's get rid of these lines right here, right? And let's do the trade as yesterday. We don't need that, right? I had that on the chart for that reason right there. I'm gonna get rid of everything. Everything's gone. I don't care, because the more you get rid of it, the more you do it again. No, the more you do it, the better you see that.
Yes, that's what I try. You know, everybody wants the scripts to do it automatically, guys, but I'm telling you, until you do it manually, it's going to help you learn. It's going to train your eyes better by doing it manually.
So let's just do.
I'm not saying that the scripts are bad. I mean, yes, we want you to know how to do it manually first before, you know, we got a bunch of scripts released.
So let's say that you're I want to put this box right here. Now, you see how the box actually is forward in front of the price? You have to take that into consideration. Use the fibs. Look what happens here. Are we below this low or above it coming into time? We're above it. Now, right here, when this changes over, we're going above this low. We're not rejecting, because if this is two scenarios right here that happen. As we were going into time, where are we right here? Are we above or below? We're below. Where are we going? Boom, right there. There goes your play, right? You got to 60, right? I think my range might be a little bit off. I thought it was 57.
All right.
From 60, we go above it. So that you took a play here. Maybe you waited for time right here. And the chart's telling you go long. Where are you going? Let's go up to price. Look at that play right there. We got above it. We didn't reject it. Say that you were shorting this by some, I don't know why, because it's a green candle and nothing's telling you short. Say you're short here and you flip it over here. And you lost maybe 3 or 4 points, and you say, you know what? It's going up here. And literally, you disregard staying in line. You say, well, this is a big pushback up, and why are we under? And at the same time, we're above the Asia range.
Yep.
Past the low of the Asia range, and we went above it. So there you got two scenarios that are telling you, hey, when I go on the 50-minute, you'll see it. If you set up, you will see your range that we got above it right here. So I set up right there. I hate that color. Not that I hate that, I like it because I can see it on the phone.
Yeah.
Right there. Look what he did. Boom. Held the 151. What are you doing? Are you shorting the low? Okay, maybe not, right? Okay, say that you're long here because we're above 151. If we're above 151, guess where we're going? Half back. We take this long from here. Do we get that? Boom, right there, you get it. Then you take that play. Now say that we're above halfback, right? Hey, we have big winnings, Dobbs. We didn't hit the range. The right candle. Wow.
That's what I try to tell you.
Yeah, we're going back up here. We are definitely going back up here. And then, well, they were selling, but they didn't get that range. So say that you're taking the halfback. You're like, you know what? We're above halfback. What is this range here? What am I doing wrong here? Why I got two lines? Get rid of 181. Oh, I took this low. That's what I did wrong. Even I mess up. I took the wrong low. No, we almost hit it. Right there. Bam, right here. Halfback, go. If you're taking this long, we're above halfback. Boom, do you get a target? Yep. Now we're above halfback here, coming into London. We're holding it. Where would possibly go? If you were headed for this target, from here, 78. Up here is 91. I mean, going into time, that's literally still paying you, like, literally
10 points.
Yeah, more than 10 points. 78. This is 90 something. The high of these candles is 90.
At least 10, though.
Yeah, you could get 10 and 5. That's what we say. So any type of setup, if you're looking at it as yeah, I don't want to, I don't know how to get into the trade. Use that. Use that right there. But there's plays to get in here. There's plays to get in here. You got right
Stang 'em
here.
line. That's Stang 'em line.
There it is. Right
Stay
there.
in it till it goes across Stang 'em line. I mean, there's a lot of
Right
different
here,
ways
you
you can
got
play
that
it.
good place to look. It held halfback right here, right? When this flipped around here, this candle, I will go in on that candle because it had an upside down candle, and then we took off and took out the highs. We're still holding halfback here, and then right here. Once we're above this halfback, then we're making no high. Um, this candle right here, when it did down, you're looking for a long because guess what? It swept below, and then the next candle you want to see above halfback. That's it right there. That's a nice push up. You're gonna see that. Plus, you're jumping off a moving average right here. Bam, nice play. You're still in it. Right here, it wicks hard down to the downside, but that's a market opening, so you expect it. But let's say you were at 80, it dipped down to 73. I mean, you're not breaking Stingham. And if you took 80, this gave you 5 points right here. Still a good thing. You work on your entries if you were trained like that. But at the same time, you're still getting 5 or 10 points. Nothing's telling you to sell. So if you took 1 mini, does it really hurt you? No. You're down 3 points. Down what? $15, $18. The entries is what you got to work on. The rest of the thing, the setup works perfectly. And then you came back to here. You're looking at, well, we break underneath here, then we're going back down here. Did it do that? Absolutely not. It didn't break underneath there. You're not selling into this because there's nothing telling you to sell. Now, a candle like this, yeah, possibly. But by then, you got 5 to 10 points on this move up. And then that's a long. That's a long. That's still long. That's still kind of long. But then when you get this, that we're breaking below, that's the only time right here that's saying this play is done. And at the same time of that, guess what happened right here? That indicator came in and said sell. And buy down here. I guarantee you there's a buy here. Because it broke. It broke all these halfbacks right here. So it definitely, on a bigger time frame, you see buy down here, you see sell down here. And it literally worked out like clockwork. Because that's the only time we broke trend right here. The rest of the time, it didn't break trend at all. And even though we were above Stingham line, say that you didn't want to short that. When it did this, now you got a scenario to go short. You got alert and that. You got risk right here. Hold the risk right here. Bam. You're on this candle, it doesn't matter. That's your risk. Boom. Start taking profit on the way down. That's what we teach. But we teach it off the whole scenario. Once you broke this low right here, look how it came right back down to the lows. Bam. You could have got all the move down, actually. Could have got that whole move down. Boom. Right there. Into New York. The same move it did. It came right back down and done it.
I think he even got another block down.
Yeah, I think it did
into in the London close.
Let's see where it went. And once you reach those blocks, like they
Yep, it hit.
So it literally popped up, and these were the blocks. And we hit everything. We hit the target to the downside, which was the 200, which we kind of said that on the recap yesterday, the daily recap, that we said we're probably going to 200. It's definitely going to 200.
Right here's that halfback it didn't hit.
Plus, we also had that 151 from Sunday that we hit down here. It's literally at this price right here. So you go to Sunday, and that's why we held this Sunday range in there, because as you saw, for the last 3 weeks, we've been in the range. They keep it high, low, mostly high, and then it trickles down from the Sunday range. So we decided to keep it on there to see how it does. Because once you hit the top side, guess what? we should have hit the downside. That's why we were calling 39, but with a 200 moving average, you're going to get a lot of buyers. And we were calling this 24. But let's set up for London's range, and then you see that there was a lot of things that were untouched down here. Remember, it didn't even hit halfback, and it broke out. So we called the breakout, and this thing literally just broke out and never came back to this range. So we're gonna leave the range on here, right? And then we're gonna go see it. And then you see that once we got below the range on yesterday, we said, oh, this is gonna go to halfback. It went to halfback actually. There you go right there. Broke to the top side. We were holding the range, came under, never hit halfback, went back up, did lower highs, and then yesterday we went into the range and hit halfback. Actually, yeah. And then we came above it and then tested the high again and literally failed it. Which gave us indication that, hey, what's that? What is that? That is literally what we teach, right? High, halfback, right? Low. So if we fail high right here and we came back to halfback and we held into Wednesday, we came down, we hit the low, we went above, held halfback into Wednesday, came back up to the high. There's a lot of indications that this was going to be sold off. Because, like I said, they left a lot unintended stuff down there, and boom, boom, high, low. Now look what we did. We were literally at halfback, which was the same as London's close range, which was kind of odd as well. Now on the yearly, it just displays something different that we're trying to. I think that they're still trying to hold into the monthlies. Can they sell it? Yeah, they could sell it. If they sell and they continue to go down, we're ready to go down here with it. But that's why we set up. Does this really matter where it's at? Yeah, it does, because this was the high. So why was it a sell? There other things were telling us to sell, and then the fact that it did what it did up here said sell, and then you got a range that we set up for. It said sell right here, and then everything told us to sell. Can you get 5 or 10 points down? Can you get 5 or 10 points up? No matter what direction it is, it's down, it's up, we're gonna get that money. Down, up, here, down, down until we got here, right here, probably into the close. It was probably a long, off the 200. But I told you guys, do not sell into this 39.50. I mean 49.50 area, because you're gonna get a lot of people that are gonna be buying there long term and a lot of options buying there. Does it really matter to us? Absolutely not. But we got to be mindful of that, because if a big order comes in and they're selling it, you better believe this market is going to shoot up like that, because they're not going to pay that. It's just areas that they want to put price at. That's going to create that big move. I think that's the move that we got down here when we first hit here. When we came down here, a lot of the moves that we had were literally that. All right, Dobbs, I gotta be out.
All right, brother.
Later.
Sounds good.